Welcome, welcome, welcome. How's everybody doing tonight? Happy Thursday evening. Welcome to our Wine and Wealth class. This is a class that we typically do for our customers only. It's like a private class that we do. But today we're going to do it for the general public, right? So we're going to share some information with you. Now, not always do we do topics on active trading. Not always do we talk about retirement. Not always do we talk about saving and things. We just try to cover everything. And a lot of times I get my topics from you guys. Actually, the Dave Ramsey video is from one of our customers. So it's helpful, right? If you're one of our customers, just let me know if there's something you want me to cover. I love doing studies. I love looking at geeky stuff. And one of the things I really love is the markets, right? I love the idea of the active traders, the long-term investors. I love the different products and asset classes that are available. And so it's one of those things that I just love to talk about. And today we're going to talk about that. I'm focused on the active traders here tonight. And for those of you that are watching live and you're not one of our customers, just sit back, chill a little bit. We call it Wine and Wealth. Well, this is now an empty bottle, but this is it's a chance for me to get to hang out and talk, just sort of share things with you. I'll do like I always do. I go right through the class. I sort of ignore the questions. And then once I'm done, I'll hopefully make it short. I'll stick around and answer questions as long as you have them. I do the same with our customers as well. So let's dive into it because I have a feeling there's a decent amount of you that participate or like to do this sort of active trading thing. Let's get rolling. All right. As an active trader, what do I mean? I mean a day trader, someone who buys and sells throughout the day, someone who buys and sells day by day, right? You buy something today, sell it tomorrow. Maybe you bought Netflix today and hope it goes up tomorrow. I mean momentum traders, people that look at the strong trending stocks and they buy it and then however long they hold it, maybe it's a couple days, a couple weeks, whatever. And I mean the short-term investors. That's what I mean by active traders. We are saying everybody besides those that buy and hold for some long-term future goals. So that's who I'm talking to today. If you are an active trader, did you know you have a 50.2% chance of being successful if you buy a stock? If you buy a currency pair, if you buy an at-the-money option, sort of, two at-the-money options if you're an options person. If you buy a futures contract, you have a 50.2% chance of being successful. I did not do that study. I believe it was Susquehanna that did that before they became somebody in the space. What they did is they basically looked back and they said, all right, if you buy at 10 o'clock on one day and then you sell at 10 o'clock the next day or the day after or the day after, repeat that process, right? So let's just do an example. I buy at 10 o'clock, I sell at 10 o'clock the next day. They studied that. I buy on a Monday, I sell the following Monday. I buy on a Tuesday, I sell 2 Tuesdays from now. They studied every option, and I think on the TradeStation platform, they have that study built in still. They did back in the day. Maybe, I don't know. You have to check it out if you have that platform. So, you have a 50.2% chance of being successful. Do you like those odds as an active trader? You buy a stock, sell a stock, next day you buy a stock, sell a stock. That's not very good, is it? Those are horrible, horrible odds. That's equivalent to flipping a coin and seeing heads. How many times are you going to see heads? Maybe you have a string of heads, but ultimately you're going to be about a 50-50 shot. And it works that way in trading as well. So you go, well, why would I do this? Why would I be an active trader? Why would I even care about this? Jim Cramer, by the way, you all know who Jim Cramer is. He was studied, I believe 2 or 3 years ago to see how successful he was with his picks, like when he goes on TV and has these suggestions. They found that he got 54% of his picks right, the ones that he tells you, buy, all that stuff. He got 54, I think it was 54% correct. And people gave him a hard time. I sort of took the other side of that and said, the man's a genius, right? If he got 54% of them, that means he's better than every average trader that's out there. He's better than the market, right? 54%, that's what he is. So what this tells you is that stock picking is not the game. You know those commercials, what is it, Schwab? You got Charles Schwab, where they have the commercial where it's like the guy goes into his living room and he's like, oh, you plan for your trade. You make sure you're ready for your trade. You hone your skills. You research and find all this data that they provide on the platform, of course. And you find your moment in time and you're ready to strike. You've seen a commercial. You know what I'm talking about. That doesn't matter at all. That's what they sell you. That's the idea, is that you can pick a stock and then you can sell it at a later date for a profit. In fact, the idea is trade management. I'm going to give you the stats on that one today. Game of blackjack, right? I was on a cruise, and I've never gambled in my life. I mean, I played like slot machines, but I've never sat at a table and done anything like that. A friend of mine's playing roulette. I have no idea how that game works. I watched him. He lost money. It didn't work out. But next to me, there was a blackjack table. It was on a cruise, so the tables were really close together. And the guy playing blackjack seemed like everybody was interested in him, so I looked over, and he had these black chips, and I go, hey, how much are the black chips worth? And I guess you're not supposed to talk to the guy, but I talked to him. And I said, how much are the black chips worth? And he said, $100. And then he looked back down, and I go, wow. You betting 4 of those then, huh? So he was playing blackjack. He was on a streak where he was winning, and he was up like $3,500, best I could tell. And in my mind, I'm like, stop, right? Quit playing. And instead, he kept playing, and his little stack went down and down and down. If he would have kept playing, his stack would have gone back up. And some of you know how to play the game. You probably would find better odds than I do. But essentially, trading is a coin flip. We have to focus on trade management. This is what I taught. I've literally trained and taught tens of thousands of traders, mostly Chinese, all over the world, right? And we never focused on you buy here, you sell here. That's the strategy. Or when the stochastics do this, or when a stock breaks out, or whatever. We never focused on a strategy because that part doesn't matter. The truth of the matter is you could pick any stock you want tomorrow and just buy it. Simple as that. Sounds stupid. Some people are going to probably make fun of that, but having done probably millions of trades, it's true. You could pick any stock and buy it. The strategy doesn't matter. The services that sell you a strategy, you want the ones that revolve around a whole strategy, right? The trade management. But nobody wants to talk about that. Boring, right? It's not exciting. Nobody wants to talk about what you do with a trade after you have it, but that's the only way you're going to make money, right? You could always tell a losing trader if he ever says to you, I had a big loser. If someone says, I trade stocks, I trade futures, I trade currencies, and I had a big loser yesterday or something, you know for a fact that person cannot make money. You cannot have big losers as an active trader, period. Which means you have to define the loser first. If you have never traded before in your life or you're struggling active trading, the first thing you have to do is define the loss, right? That's exactly how you have to start. Let's go, will this work? Oh, he's on fire. The first thing you have to do is define the loss. I'm going to use an example of $100 because my math is not that sharp after, well, 3 glasses of wine. Let's say you're willing to lose $100 on a trade. I don't care if you're a day trader, swing trader, whatever it may be. If you're more of a day trader / person that buys and sells within a day or two, you're going to fix your loss in terms of dollars, right? That's the first thing you're going to do. Hey, I'm a day trader, I'm a futures trader, I buy and sell day by day, therefore I'm not going to use a percentage, I'm going to use a dollar amount. How many dollars are you willing to lose on one trade? If you're a swing trader, I'm going to use 8% because that's easy. If you're a swing trader, if you're a momentum trader, you're sort of a midterm investor-ish, you're going to use a percentage. You're going to say, I'm willing to risk 8% of my account on one trade, or 2%, or what doesn't matter, whatever you're comfortable with, right? That's what you have to do to start. Nobody does that, right? Tell me, I can see the comments now, I got my little screen up. You tell me if you start your day, if you start your trading activities, or if you already trade, you have started by defining how much you're willing to lose. See, let me know in the comments below. See, if I start there, I can mold you to be successful, or anybody, whoever you follow, any guru or whoever's good at trading or whatever. If you start there, you can be successful. If you don't start there, no chance. There's a 0 chance you're going to be successful. Just letting you know. If you take one thing away from this tonight, you have to define your loser, okay? That's how this works, because in reality, you're going to lose 50% of the time, right? Are you okay with that? If you have we're just going to say 50-50 shot. Stocks, options, stocks, futures, and Forex. You have a 50-50 shot. It's been studied. It's not my opinion. It's actual fact. 50-50 shot. That means if you're risking $100, you have to make more than $100, right? You cannot take a trade that you're risking $100 and tell yourself, oh man, it's a $75 profit. Yay. Let me take that $75 profit. You can't. You have guaranteed that you will lose. right? Instantly, right? You take all the classes and all this stuff that people offer out there. At the end of the day, define your risk and don't accept anything less than that risk, right? Have I lost you already? Okay, let's keep going. All right. So if you're going to lose 50% of the time, you risk $100 and you make $100, you see it, right? You already see the math. This is not going to work. I make 500 for every 10 trades. I make 500. I lose 500. That's not very successful. That private jet and all the stuff they talk about you buying as being a successful trader, you can't. You didn't make any money. After costs and everything, you lost money, right? You can't do it. If you risk 100 and you make $200, right? That means you're profitable forever. It's not great, right? But it means you're profitable forever. 300 is the holy grail. 3 to 1 is the holy grail of trading. Anything better than that, you got it. You don't need to be here. Go. See you later. Take your glass of wine and move on. Because you actually don't need anything. Why? Let's think about it. If you, as a beginner trader, take 10 trades and you are not going to do as good as the market, I'm sorry. You know, you have a 50-50 shot, but you are not going to do as well as 50-50. Right? You're going to do worse. So let's say that you only got 30% of your trades right. You're brand new. You're like, I barely even know what I'm doing. I press the button when I get excited, but that's it. I don't know what else to do after that. If you get 30% of them right, that means you're going to lose on 70%, 7 out of 10, right? We're just going to say it that way. If you risk $100, you are going to lose 700, right? 7 out of 10. You're going to lose $700. How much do you need to make on your winners to offset that? You're only going to get 3 out of 10. Does anybody know? I mean, it's not like a complicated math model or anything, but like if I told you you were only 30% successful, or you did a whole series of trades and you dumped what I'm about to share with you, the spreadsheet I'm going to share with you, if you dumped this on me and said, Dustin, what's wrong? I'm losing. What's going on? And I see that you only get 30% of them right. How much better I see you make on your win? Is that right words? How much do I need to see you make on your winning trades in order to be successful? You need to make 2.33 times your risk. It's defined, right? We just took all the fun out of investing or trading, active trading. We took all the fun out of it. Yeah, I'm going to lose $100 if I lose. I got a 50-50 shot, but I'm a beginner. Let's say I only get 30% of them right. My break even is $233. You win, or really it's $234, isn't it? Yeah, it's $234. Right? You're going to lose 700 7 times. You're going to gain 234 3 times. Your break even. It's not great, but at least you get to keep playing the game. Your job as an active trader who's brand new or someone who's really struggling is to just break even, right? Well, we used to, sort of a short story. We used to, I worked for a company where we would say, hey, we'll teach you how to trade and then we'll give you money. Right? We'll just let you go trade. You can use our money. It'll be great. And so we would put them through this whole class and everything. And if you passed, you got the money. Everybody passed, by the way. I didn't know that at the time, but everybody passed. So then you get a little bit of money. I think it was $10,000 or $20,000. And they say, go trade. Go have a good time. Now, we're going to tell you how much you can lose. All you have to do is make a profit. We don't care how much it is. Just go make a profit. Show us you can make a profit. And that was the game. So right away, I want most of you to assume I'm going to make profit 30% of the time. That's the best I can do. Right? Now you know you need to not take off a trade until you have a profit of at least $234, preferably more. Right? If you're only getting 30% of them right. Okay? Let's say, well, so I know like these scalper guys, someone said it a minute ago, people that just trade quickly, right? Every day they just buy and sell and buy and sell and buy and sell. I know a guy over on the other coast of Florida, you'd never guess him if you saw him. I mentioned him before. I'm dying to get him on the show. But he just scalps one stock all day long, in and out. His goal is to average 1.5% of his loss. That's not very good, right? But he does it so often. He's really good at it. So he can do that, right? So let's think about that. I'm going to back this out for a second. Let's say the guy makes 1.5 times his risk. For some reason, let's say he's risking $100. He makes 1.5x. This is documented. He tracks it. He's really tracking his trades. How often does he need to win? You got to be able to figure this out. Or you got to work through these models. You can start as conservative as you want, but you got to be able to work through this. If he got 40% of them as winners, he'd be pretty good. He's only supposed to get 50% of them right, statistically, right? Some of you will do better, but you know, he's only supposed to get 40% of them right. So for every $400 in, he's going to have a 6 to 4, right? This is where he's at. He's looking at a $200 profit for every 10 trades. It's not great, right? It's just not going to get it done. If he got 50% of them right and was actually average, he'd be at $250 for every 10 trades. You got to do better than that, right? I know a guy, I'm going to say his name, he won't mind me saying, his name's Robert. He runs a service where he trades right in front of you, right? He just buys and sells stuff. Not that exciting to watch because he only gets like 33% of them right. He tracks his stuff. He uses the same thing I'm about to share with you. He tracks his stuff. He gets about 33% of them right. But he has no problem when he gets a winner, it will be more than 3 times his loss, right? That's it. It will be that much. It's not very uncommon to see him do 5, 6, 7%, or 7 times his loss, right? That's awesome. He can even get less of them right and still be more successful. So the name of the game is not being accurate. Everybody says, I want to buy, I want to be so accurate, I want to make all this money. That's not the game. The game is trade management, right? So you've got to get to a point where you know these numbers, right? You're working through this, you know the numbers, you're risking $100, and you are generating so much in win-loss, right? And I'll show it in a second here with you, but you got to do this. Now, this doesn't include trade management. A lot of people, you might have a problem with this. Let's say your goal in life is to find stocks that are trending higher, and let's say this is some sort of moving average that you like to follow, and your goal in life is just to wait for them to pull back around average, and that's your strike point. That's where you buy. Okay, now, you have a risk of the $100, right? So you're very quickly going to say, okay, well, I'm going to buy at, say, $23, and I'm going to put my stop loss down here somewhere, give it a little bit of breathing room. Let's say it's $22, right? Make it easy on myself tonight. How many shares are you going to buy? I know there's a delay, so I'm not going to wait. So if you're buying at 23 and you want your stop at 22, you want to risk $100, you could buy 100 shares. And you have to buy 100 shares, right? Now, let's say you buy and you're good. It moved down a little bit against you and then it started to trend higher and everything was good, right? You're not always going to leave your stop there, right? You're at some point going to say, okay, the stock's way up here now. We're sitting at 23.50, whatever. We're sitting at 23.50. I don't need to have a stop here. Now maybe I could put my stop here. Oh, it's getting better. Now I can put my stop loss here. Now I can put it here, and so on, right? You've got to stay active with this stuff. If you want to be an active trader, you've got to stick with your stocks, right? So by doing this, what are you doing? You're reducing your risk. The first time you move your stop from here to here, you cut your risk in half. There has to be a moment in time that you define when that happens. Now, your risk is $50. If you cut your risk in half, aren't you really having better odds here? The more you can raise your stop to the point where maybe you're not risking anything, the better off you are, right? So you got to get into this trade management as well. That's maybe, we'll see how you guys like this class, and maybe we'll move on to that in another class or something. I got ahead of myself. Let me share with you, if you'll give me just a second, I want to share with you how you can track it. This is old school, man. This goes back like 15 years. I don't know if you're ready for it. I hope it's not too blurry. I'm sorry if it is, but let's go through this real quick. And if you're one of our customers, you let me know if you want this. I'll just give it to you, send it your way. I'm trying to get it to where it loads in the dojo there for you, but here we go. You ready? Oh, it worked. Okay. You've got to track your trades. Bottom line, if you're a beginner and you are not somehow tracking your trades, you will lose. I promise you. I've watched a lot of people lose just by trying to help them, right? They don't track their trades. here's what we're looking at here. At the top is the most important thing. It says your total profit and loss. Over here, I call it your batting average, right? How successful are you? What's the percentage that you get right? This should actually be bright, stinking orange so that you look at it. You live and breathe by this number and this number. This is your win-loss ratio. So right here, these two numbers, you get X percentage of them right, and when you do get them right, you make so many multiples of whatever you're risking. This will just do it for you. So the way this breaks down is you're talking about how did you take the trade? Was it your idea? Was it someone else's idea? Did you watch it on TV? What was it? Was it a winner or a loser, or did it basically break even? Did you buy the stock or did you short the stock? Hopefully you know what that means. If you're a day trader, what time of day did you take it? Did you know that there are better times of day to buy a stock if you want to be profitable? Did you know that? There's actually 3 different times that are more advantageous, where the odds are just slightly in your favor to do that. Anyways, so if you're a day trader, you put it here. Off to the right, this is where you could define your strategy. What do you call it? That thing I just mentioned a second ago where you find trending stocks and you wait for them to pull back to some area and then you buy. Give it a name, you put it in the spreadsheet, and you can track it, okay? Then, what made you do it? Were you a day trader and you were looking at a 5-minute chart? Were you a momentum trader and you looked at a daily chart? You want to jot that down here too. Okay, so what I did is I put one in here for you to get this started, and then I'm going to fill one out. So, we said today, right? Today, at between 10 and 11:15, we bought a stock. It was our own idea. We saw it. We created, crafted it. It was our own idea, so it was my own trading play there. And the stock was AMD. I'm not saying I bought this, by the way. I'm just this example. Were you long or short? We were long. What was the play type? The strategy was just a basic pullback buy. I had to give it a name, so I put a name in there. Time frame that we used to identify that it was a trade. We'll just say we used the, I'm going to change that. Let's say we use the 5-minute chart. Right? Oh, time frame. Sorry. There we go. There we go. Okay. So next, you're going to put the winner or loser. Did you make a profit or not? Did you lose the $100 or did you make some multiple of it? That's it. So we put that it's a winner. We bought shares of AMD at $33.75. We sold them over here in the red column, 100 shares for $34. We made a profit of $25. That's not good if we were risking $100, right? Now, let's do another one so we can see the batting average come to life here real quick. I won't take much of your time unless you're digging it, but let's just say later in the day, you went back to it, you liked this AMD, you found a new opportunity to go long. It was the same sort of buy setup, same time frame. This one was a loser, right? You bought 100 shares at 33, doesn't matter. And you sold 100 shares at 34, right? Now, we're starting to build your batting average here, right? I put in a loser before, right? So I put it as a loser. Sorry. I want to change it. That was a winner. Okay, so we don't have a batting average. We don't have a win-loss ratio because we have no losses. We have a profit racked up here over 2 trades. Watch what happens. I mean, I know this. You guys know how this works. This is not like surprising anybody. But let me do one real quick here. We went back to AMD. We went long on the stock. Basic buy setup. I'll keep all this the same. This one was a loser. We bought 100. Well, let's say we bought 50 shares because we had a wider stop, right? You with me? So we bought the stock. We did not have a dollar's worth of stop loss. This time we had $1.50 to work with, right? So let's say in this case, I'm going to just go that we bought it at 34. We sold the 50 shares for a loss of $33.50, and we're going to change that number as we go. So what's happening here? Up at the top, we've got a total profit over 3 trades, gross profit of $100. We are 66% profitable. This should turn green if that ever goes over 50. That'd be cool. I don't know how to do that. So 66% of the profitable. So if you pull this up every day, you're going to go, okay, I can and should be profitable. I should be able to continue this. If I drop and I'm no longer as successful as all these trades rack up, that's okay. I have a good batting average. I am also winning 2.5 times more than I lose. This is a very successful trader in the long run, assuming all this continues, right? Now, let's say that over here he didn't follow any risk and he sold it. The stock drops and he loses, sells it for $2 less. He's very successful, but he's barely making any money. This is not a way to make a profit. It's just not going to happen. So what happened here? Let's say that he goes, I thought I had it. I bought the stock. I didn't take my stop loss. I actually let it go a little further. Oh my gosh, I made an error there. Let's scroll over and adjust that. All the way over here. You can put the error code. What happened? He changed his stop loss. Item number 7. You were a bad trader, right? You didn't follow your rules. Something got ahead of you. Maybe there was news and the stock fell real quick. Things happen. But you changed your stop. And so on this trade, you're going to put the number 7, man. I changed my stop. And it's going to be right in front of your face that changing your stop loss cost you $100. I'm going to zoom in on that because I think I can. Oh, yeah. There you go. When you have your errors in place, you are very quickly going to go, don't do that again. That cost me $100, right? An extra $100. If you took a trade that you just don't know much about and you're like, I don't know, I just kind of did it because I thought it was interesting, that's a trade that's not in your trading plan. You had a goal, you had a business plan to set out for the day, and you didn't achieve it, right? You got to put that down. As you get better, you look for better entries and things like that. I understand you could change your own and make them whatever you want. But here's the point. This is like the whole point of this class. It has nothing to do with what you think about a stock. Being successful, buying and selling and active, all doesn't matter. Pick any stock you want. If you think a stock is going higher, you're going to develop that skill. And most of you, some of you maybe already have done that. But what you're really focused on is how close to the best entry can I get? And from there, how can I look for those types of stocks that produce bigger winners? Always happens. Customer will email, hey, Dustin, I own this stock. What should I do? And I go, what do you mean? My same answer is always the same. What do you mean, what should you do? You tell me what you're going to do, right? Or when are you going to sell it? Or when are you going to take a loss? Silence, right? They don't email back. They go, well, this guy's not very helpful. But that's true, right? When you buy a stock, you need to already know where you're going to sell it and where you're going to sell it for a profit. Sell it for a loss, sell it for a profit. If you don't know that, you already lost in the long run. You may get some trades right and feel good. Hey, the stock market's basically been straight up for years. A lot of you look really successful. You got to define that. You really, 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 really got to define that. All right? So that's basically all I have for you as far as sharing that. I could go on for hours, of course, but I try to keep this, hopefully, this is a lot longer than classes usually are. I will answer questions if you have any. I'll dig through them here on the old YouTube deal-em-a-bob thing, and we can go through this. Dustin, not me, he says, investing mathematics while drinking Founder. Oh, man, what are you talking about? Jose, I'm glad you liked the class, man. Nathan, so he says add in a spot for taxes. This is old school, right? This is just something I've had forever. There's probably software out there. I'm actually pretty confident there's software out there. A lot of the active trading platforms that a lot of people stay away from because they're like, I don't want to pay commissions. Well, it's built into there, right? So these are extra things that give you the advantage, which make it worth paying a trading commission to use some of the more advanced platforms out there. I sort of dislike when an active trader says, I'm just going to go use Robinhood. It's not going to work. I'm sorry, right? You can have fun like mid-term to long-term trading and stuff, but it's just not going to work for you. The tools aren't there, right? So take a look around. By the way, those commissions are negotiable. Go negotiate, right? Trade for a little bit, then call them up and say, you see how active I am? What do you got for me? They will work with you, I promise. Derek says, thanks. I'm checking out in the Robinhood. Well, there you go, right? John, you're very welcome. Mr. K, we're going to do an options class, very impromptu for customers. A lot of our customers are asking about that. I have promised them that I'm just going to come in on a weekend and just turn the camera on and start talking. And it may be a long one, but I'm just going to go with all options sort of top to bottom and post it in the dojo. This class will also be in the dojo for you as well. Yep. It seems like I struck a nerve there with some of you guys have been struggling on AMD. Yeah. Bruce, do you use multiple target areas to take a profit? I prefer to. I mean, it's up to the individual. What I like to do is once you get to raise your stop, meaning you're no longer risking the full amount, now you have the ability to say, well, let me shoot for 2 different target zones there. So on that spreadsheet, that's why there's multiple categories. You can go up to 4 sale areas, right? Some people will also, I'll give you a quick little tip for those of you that may be struggling out there. If you hit a string where you're not trading very well or the markets are very volatile, there's news or something, what you can do is say, I'm risking $100 on this trade. This is advanced, by the way. You could say, I'm going to risk $100, but I'm going to break it in two pieces. I'm going to buy some shares and put the stop where it should be to risk the 100, but I'm going to take the other shares, I'm going to put it down here. So if I end up hitting both stop losses, I will then have lost the total of $100. It's just called having twice the stop. I didn't invent that. Guy by the name Paul. Can't remember his name. He's here in town. He invented that, or at least came up with it, where that way it could be that you're buying a stock and your entry is just a little off. Well, until you get back into tune, spread your stop loss out. But that was the long answer to Bruce's question. Dinaz says, the videos have been right on cue. You've been supplementing your advice oh, cool. Thank you. Yeah. Derek says, if I win Guess the Dow, can I start an account with Jazz Wealth? You don't have to wait. I mean, you could technically have an account and get started real small, and then if you win, we could put the money in there for you. What he's referring to is a game that we're playing called Guess the Dow, where basically it's on our website, whoever guesses the Dow closest without going over each week, we'll send you $100, and if you're one of our customers, we'll just give you the $100 in your account. Oh, Maslam says, Tesla is my problem child. I hear you. That's a tough one. It's a tough one to day trade or actively trade as well. Yep, I would agree with that. You're planning on learning to use options in an IRA. What would be a good amount to start? Start with not using your IRA. You're limited in the things that you can do. There's a whole different set of rules depending on the brokerage firm you choose. So I would start as small as you can with whatever brokerage firm will let you start with all of the features. So you're probably going to need, I think most brokerage firms are $4,000 to have margin. You're probably not going to be able to sell naked options in terms of calls. I would start small or maybe paper trade a little bit purely to understand how they work. So buying a stock and selling a stock is really not something you have to paper trade. Right? We all understand. You buy it, you sell it, you either made a profit or you don't. Right? Simple. Options are not like that. You don't just go in and start doing things like that. You actually got to want to know how it all works before you do anything. I would say learn first, please. If you buy some stocks for dividend income and some stocks for growth, is there a good percentage of each type that will work? There can be. It depends on, there's a lot of variables there in that question. That's a tough one to answer generally. It depends on what that individual goal is. Because if you're saying, I want as much growth as possible, I do like the passive thing and I want some dividends, then there's a big shift, right? So if you go, well, hey, I'm basically retired, I like a little growth, but I like some dividends, then the shift is the other way. Yep. David back in the States, welcome back. I knew it was quiet around here. Do you ever use a stock screener? I do. Yeah, we do. We basically have all the platforms here, not that we offer to customers, but that we use just to keep track of everything and sort of keep up to date with everything, and they all have different features we like. They all have screeners. There are free ones you can use. I'm not sure the features that you'll get, but like finviz.com, I have no affiliation with them. They have free ones there, not so much for day trading, but for just scanning for ideas. Speaking of ideas, Trade Ideas is another one. It's more of an active thing. It's a little costly, but there you go. What's a good way to set the stop exactly for your risk, right? You want me to go over that? First of all, what's your risk? This is real easy. You got to be able to calculate this quick too, because if you're an active trader, you have to very quickly be able to go, oh, I need to buy 666 shares, or I need to buy 243 shares because I'm buying here, my stop is going to be here, and the difference between that, right? Can you do a video on all the taxes associated with selling stocks and dividends? I think we did. It might be in the dojo. We might have done it just for customers. But that's a good topic, actually. I like it. Any thoughts on steel? Not really. Tough area. I get what's going on there, but it's a tough one. Boeing was your bad stock. All right. Well, that's not a bad one to have it be a bad one. If it's better than like these little biotech stocks that you never can tell what they're going to do. By the way, if you're an active trader, skip the biotech stocks. Just totally skip them. There's plenty of other choices out there. So tough. Robinson being sneaky. I like the game. I like it. Jacob says, this is boring. That's the point. That is truly the point. Take all the emotion out of the whole trading thing. I don't care. Right? If you don't like it, that's great. Go do your own thing. But if you don't do this, I promise you, you won't be profitable. Andres, do you still day trade? I really, really want to. So because I manage customer accounts, I'm actually still able to, stocks anyways, but I have to be able to prove that I didn't buy something ahead of a customer. And so because I don't want to have to prove that, no. No, absolutely not. Good, David. Thank you. Love it. We're not going to convince old Jacob there. Very amateur question, but couldn't someone just buy a stock right before a dividend is paid? What's the best way? You would think, you would think like, oh, dividend is going to get paid tomorrow. Yes. You actually, I did a video on this, the different times for when you need to be in the stock. You actually need to own the stock ex-dividend date. So you want to, which is really a couple weeks sometimes ahead of when they pay the dividend. So you can't actually buy it the day before and then magically get the dividend the next day. So, nope. That would be a good, game plan if you could. Yep. You're very welcome, Lucor. Yep. Maslow, yeah, thank you, Maslow. He's answering the question for me. Yep. How do you calculate how to move the stop up as the price goes up? Bit of an art behind that, too. A lot of people will say I have to at least be 1-for-1, my risk versus my current profit, before I will move the stop at all. Now, from there, you have to really look and learn how volatile are stocks, the ones that you're trading. Speed and volatility. You guys hear me say it all the time with retirement accounts. It applies to active accounts as well. You cannot move a stop so tight on something like Netflix as you could on Ford. You get what I'm saying? I was trying to make a big difference there. So Netflix, very volatile, whips around, second by second, day by day. Ford, not so much, right? So you have to know what stock you're trading first before you know how far you can raise that stop up. Mm-hmm. Jose, when is the next class? Well, I do these every week for customers. Your name went by. I'm sorry, I missed it. But I do them every week for customers. This one, I just thought bring it out to the public, share with you. I can't do the other ones publicly because a lot of times I get really, really specific and it's not allowed. Yep. I want to profit from the... Oh, sure. Yeah, you can. Then, David, you're right. Yep. I thought you meant buy it like the day before. Yeah, you absolutely could. Yep. Now, that's popular. Your position on swing trading longer term in 401k funds based on technicals and weighted average, you're probably not going to be allowed to. If they have like the ability for you to put in your own stocks and stuff, maybe. But mutual funds, you're going to be frozen. You're not going to be allowed to do that. You can only do so many transactions in like a 6-month window or something. So careful if you're thinking about being active in your 401k. Yep. You were only considered for trading options on level 1. Yep. So David, you either don't have enough money or you haven't applied to for level 2 and so on and so on. Level 1, are you at TD or TD or their affiliate there? So what that basically means is you can buy calls, or you might be a Robinhood, huh? You can buy calls and you can buy puts. That's it. Simple as that. It means you probably don't have enough money or you don't have margin. Yep. I'm going to have to jump down here a little bit. There's a lot of questions. Well, there you go. What do you think the best sector is to trade in for active trading? I think it's either retail or the individual sector ETFs. Just my opinion. I like a lot of the retail stuff. Semiconductors are good too, by the way. A lot of good ones there. Yep. Okay, whoa. Yeah, I hear you. Level 1. Oh, you can do covered calls too? Okay. Yeah, cool. That's fine. I mean, that makes sense because you already own the stock. There's no risk involved there. Nice. It depends on the brokerage firm, really. Some brokerage firms will let you do a lot in your retirement accounts, and some of them won't let you do any at all. Terry says you prefer futures for day trading. I would agree. I would agree there. Everybody's got to start somewhere, though. If you're learning on stocks, futures is ultimately. They used to say stocks are where the kids play, and futures where all the big boys play. So I understand. Last question from David. Could someone short a stock right before X date and then cover right before the stock adjusts for the dividend payout? If you are short the stock, you pay the dividend. If you're in on X date, right? So you're responsible to pay the dividend. You don't actually collect the dividend. Same if you decide you're going to sell calls. Same thing. There's no trick there. The price actually changes. Hope I said that right. Is it better to do a traditional or a Roth IRA? I usually go Roth. Yep. I'm usually a Roth person. It depends where you're at in your life. You got to be able to qualify for it. You got to be able to actually qualify for it. You got can't make too much money. You got to be married, filing jointly, and all that stuff. Yep. Oh boy, I can't read whatever language that is, but I hope that's not a question I missed there that's important. Okay, that's all I have for you here today. I appreciate you coming by. We'll do one of these again every now and then. I make them live, but obviously out of respect for customers, we keep them private. And so if you do happen to join us here at Jazz Wealth, all of the previous classes are always available in the dojo. So it's something that it's not that you can't go back and see the classes. If I could put it up, I'll show you. Here's basically in the dojo what I share every day with you guys. But if you go to the video library, all the previous classes and portfolio updates and stuff, they're all in there. And it's kind of a lot. But I try to keep those classes shorter. But in the meantime, I appreciate you joining us. Have a great rest of your evening. Yep, that's all I have. Enjoy. See ya.